Crude oil could go to $40 a barrel. Gasoline could drop back to $1.89 a gallon. Inflation could drop by 2 to 3 percentage points. And everything going on in the Iranian war could be nothing more than a blip on the radar as we look back 2 to 3 years from today. And here's my answer. Not likely. Not only not likely, not probable. So today, when you think about the price of crude oil around $85 a barrel, and you listen to all the rhetoric coming by all the media and resources out there talking about the war in Iran and what's going on in Russia and Ukraine, they're only giving you about 60% of the story. I mean, if you think about just what's happening in Russia alone and all the attacks by Ukraine on their oil facilities, refineries, Aframax, waterborne vessels, when you think about just the disruption, it's probably to the tune of 30 to 35% of Russian refinery products and processes have been taken offline. Now they're buying gasoline from India. That's how bad off Russia is. I see nowhere in the news where anybody's calibrating or calculating that disruption, either in raw product or basically supply disruption in refined product for diesel, jet fuel, gasoline, etc. Now, when I think to you and me as consumers, I'm trying to get reality from what I call the fantasy story. And the fantasy story is all is okay. Trump's going to figure this out. President Trump's going to figure this out. And once we get the Strait of Hormuz figured out, everybody's just going to settle down. We'll be at $70 a barrel by Christmas and all is good to go. Well, you know what? I got news for you. We could be at $40 a barrel. If we continue to take all of our reserves and dump it in the market, if we take all of our soft barrels and do that, if we take the idea that just because we open the strait, don't worry about the 1.8 billion barrels that hasn't been produced and delivered. We won't fill the tanks up. We won't fill the strategic petroleum reserves. We won't go back and fill all the tanks in the field. We're just going to go, you know what? We'll do that later. Let's just flow everything we can if and when the strait opens up. That'll push a decrease in demand. We'll offset that supply, and now we'll see oil down below $50 a barrel, $40 a barrel. Not going to happen. It won't happen because you have to factor probably a $10 to $20 a barrel, what I call uncertainty factor. When you can take a drone or a projectile and you can disrupt waterways and vessels and marine and pathways on open water, we can transport as much as 15 to 25% of global supply of crude oil. You got to say to yourself, the insurance companies aren't going to insure those Aframax. If they do, they're going to have to charge a ridiculous amount. That's going to go into the cost of the barrel. When you think about the delay, the cost of war, when you talk about rebuilding the countries, and you talk about all the reparations that are going to have to take place to those that are involved in the war, you think about the offline suppression in Qatar and Kuwait and Saudi and the refineries and the pipelines. See, none of that's factored into this rhetoric we hear in the news. But if you look at it from a simplistic standpoint, you're looking at $40 oil? No way. If it drops to $40 a barrel, it'll be like hitting the ground, falling out of an airplane. You're going to bounce once and it's over. You're looking at probably a bottom baseline price in the best case scenario of oversupply, Strait of Hormuz solved and back to peace, and demand destruction all coming together one time. You're probably looking at maybe $55 to $60 a barrel for no more than 90 days. But what's the market really telling me, looking behind the scenes at everything that goes into the actual recipe of where the current market is for commodity prices, both with natural gas, LNG, and crude oil? And what it tells me is everyone's dumped their tanks. We've given all the soft barrels we have. There's a lot of rhetoric about what's going on in the Middle East. It's getting worse, not better. And that hornet's nest has been stirred up. Now those hornets are flying and they're attacking neighbors and they're creating coalitions that are not favorable to the solution of peace in the Middle East or the Strait of Hormuz. And so at $85 a barrel in the middle of the month, the 18th of the month, let's see what happens by the 22nd through the 24th. And my guess is that's where you're going to see that rebound in prices, because I think we're going to go quickly from 85. There's a real good chance in the next 7 to 10 days we'll be somewhere between $95 and $110 a barrel. Why is that? Traders are waiting patiently to see if they buy that last amount of physical oil that gets them their contracts fulfilled, or do they get to have it at a discount? And they're playing timing against quantity and limitation in supply. But my history, 40 years of doing this, I believe you're going to see some real robust trading starting about the 22nd or 23rd, and that could be a $5 to $15 a barrel increase. Now let's talk to you as a listener as I wrap this up. Why do you care? Why do you come in and listen to what I have to say? 40 years of experience doesn't mean I'm the expert of all experts. What it means is I'm giving you fundamental, practical ideas of what's taking place in the market that you're not hearing from the collective media. And what it really means is we have a major disruption to supply, a hungry consumer market for crude oil. and complete logistical nightmare. There's nothing available short of a pressure to the high side and rising commodity prices. I mean, we want to wish for the best, but that's not how you make money. What you do is say, as a consumer, I'm prepared for rising inflation, higher energy costs, and the Strait of Hormuz not being resolved. I don't even think by the end of the year. I think this is ongoing for quite some time because of drones and because you now have a fractionalized Middle East all figuring out how to put those wasps back in the nest. Good luck with that.